Hello and a very good afternoon to you. I'm Rachel reporting live from Kalkine Studios. It's lunchtime here in Sydney and time for the Mid-Market Pulse. In today's show, we'll take a look at the overall Australian share market performance by mid-session trade. We'll also explore the biggest winners and losers of the day, such as the A2 milk company, GUD Holdings, Star Entertainment, Bank of Queensland, Rio Tinto, amongst others. Now, Australian shares edged higher in choppy trade by afternoon, led by gains in tech and realty stocks. The market sentiment was dented after Prime Minister Scott Morrison-led government slashed its economic outlook for the September quarter. The gross domestic product is now expected to drop by 3% or more in 2021. That's up from the previous guidance of 2% or more. Treasurer Josh Frydenberg made his comment after the International Monetary Fund overnight lowered its Australian growth forecast for this year to 3.5%. from 5.3% projected earlier. The global lending agency, however, expects the economy to rebound strongly in 2022 following an ease in COVID-19 curbs and the reopening of the economy. The benchmark index, the ASX-200, was trading 4.1 points higher by lunchtime. The index opened in positive terrain today, but soon slipped into the red. That was in the absence of any major cues. Meanwhile, US stocks ended marginally lower in overnight trade. That's as investors awaited the September quarter corporate earnings reports. Inflation worries also weighed on market sentiment. On Wall Street, the Dow Jones fell 0.3%, the S&P 500 dropped 0.2%, and the Nasdaq ended 0.1% lower. Back home on the sectoral front, 8 of 11 sectoral indices are trading in positive terrain. The tech sector is currently the best performer with a 1.1% gain, undermining muted cues from US counterpart the Nasdaq. The tech sector was followed by A-REITs, which gained 0.9%. Among others, consumer discretionary, consumer staples, energy and telecom sectors also saw a surge in buying activity. Bucking the trend, the financial sector was the worst performer with a 0.5% loss. Materials and the healthcare sectors also traded lower by mid-session. On the COVID-19 front, New South Wales reported 444 new local cases and 4 deaths in the past 24 hours. Meanwhile, Victoria's daily cases surged to 1,571, while reporting 13 deaths yesterday. This is the highest single-day death toll of the current outbreak. Despite the rise in cases, the state government may soon reveal details about the next phase of eased restrictions when it hits its target vaccination rates. The top gainer on the ASX so far today is infant formula player, the A2 milk company. Their shares rose 8%. Some of the other notable gainers were automobiles and components business GUD Holdings, agri-chemical company New Farm, gambling business the Star Entertainment Group, and corporate bookmaker PointsBet Holdings. On the losing side, Aussie retail bank, the Bank of Queensland topped the losers chart by falling 3.3% so far today. Some of the other top laggards were Diversified Financials Group, the Janus Henderson Group, blue chip miner Rio Tinto, industrial chemicals manufacturer Incitec Pivot, and miner Mineral Resources. Now let's take a closer look at the Bank of Queensland. Their share price dropped over 3% despite reporting strong annual earnings for 2021 financial year. Statutory net profit after tax zoomed 221% year on year to $369 million, and that was excluding the ME Bank. Cash net profit after tax was up 83% year on year at $412 million, while total income rose by 13% to $1.26 billion for the year. The bank has declared a fully franked dividend of 22 cents per share, taking the full year dividend to 39 cents per share. Next up is ASX-listed UK-based exploration and development company Adriatic Metals. Shares of the company entered a trading halt. They're awaiting an announcement. The company has inked an agreement with investment management firm Orion Resource Partners for a $193.9 million debt financing package. Adriatic intends to undertake an equity raising of up to $102 million, which will be used to start construction of its Veras silver project. In a separate development, Australian mining and exploration firm Sandfire Resources announced this morning it plans to sell its entire holding in Adriatic Metals. The miner intends to sell its stake through a secondary sale of up to 34.6 million CHESS depository interests. The sale will be implemented at $2.80 per share. That's a 15.9% discount to Adriatic's closing price on Tuesday. This will see Sandfire receive about $97 million in gross proceeds. The transaction will be conducted as a placing to institutional investors through an accelerated book build to be carried out by Canaccord Genuity, RBC Europe and Stifel Nicolaus Europe. Shares of MyState traded 0.4% higher after the diversified financial services group appointed Brett Morgan as the company's managing director and CEO. He is currently the CEO of Banking and Wholesale at ASX-listed BNK Banking Corp and has held a number of key executive roles at ING Direct. He'll start with MyState in January 2022. And goat milk infant formula player Bubs Australia shares surged 27% after they reported a sharp turnaround in the first quarter. The company's sales almost doubled to $18.5 million in the September quarter, while group revenue rose 45%. International sales surged 489% on the year before and 35% on the prior quarter. China sales increased 156% on the prior corresponding quarter as the company recovers from COVID-19 lockdowns. They posted positive operating cash flow of $490,000 on sales of $15.3 million. Well, that's all for now. This is Rachel. Stay tuned for more updates throughout the day.